I think I've been experimenting in my life for last 15 to 20 years, and I love doing that. I love doing new things, and it comes from a place where you're not afraid of experimenting, taking a leap of faith with every instance of your life. I'll walk you through my journey. Most of my friends believe that I'm a risk taker. I think I'm a risk mitigator, and I'll leave it to you guys to decide which bucket I fall in once I walk you through my journey. My personal journey, I think, is inspired by SRK. I sincerely believe that if you really work hard, if you are really persistent, and if you're constantly trying to achieve something, it will happen in your life. Unfortunately, my professional life is not as glorified as my personal life is, though it looks very beautiful on resume. I started my journey out of college as an entrepreneur. Did that for about 8 years. Got an amazing exit. Moved out of India. Was in Europe for a short while. Incidentally came across Capgemini Consulting. Started doing some consulting projects with them, and that's when I realized the IT industry is so big. I was literally IT dazzled. And for me, the whole idea was how do I build the next big thing in this industry, which is on a boom right now? What I did was a little unexpected, especially by my friends and my family. I took a break from life, went to ISB, Indian School of Business, did my MBA from there. Post ISB, I was actually getting into one of the largest tech firms, and that's when Bollywood happened again in my life. I realized, or I saw, from a Ritik Roshan to a Farhan Akhtar, all the guys were into investment banking. Uh, it inspired me. I was excited, and I went and joined an investment banking firm. And then that's when it dawned upon me that most of the guys in Bollywood did not get it right. The guys who are sitting on top of this food chain are the venture capitalists. I switched my gears, said, let me go and try becoming a venture capitalist. Did that for 8 years, invested in a lot of early and growth stage startups here in India, led two large venture capital funds, invested in founders whom I believed are actually questioning the status quo of the industry or the sector out there. And that's exactly when I felt that now I have found a mission for myself where I, in my head at least, thought that I can go and start disrupting a sector which has not yet been disrupted, which was the stock market itself. I built a startup called Stockgrow, primarily for the millennials like you, people who want to understand how to invest in stock markets, but are having some level of inhibition, apprehension of getting into markets. We started building Stockgrow with the intent of enabling millennials and making them investment ready. Interestingly, my tryst with stock market actually started in the year of 2002, and it was almost about to end very abruptly in 2008 when I lost 80 lakh rupees in stock market in just a span of 2 weeks. Right? I'll walk you through the journey what happened. Do you actually understand how markets work? And when I ask this question to most of the guys, people have this notion saying, we pata hai, kya hota hai, kaise hota hai, my uncle does it, my friend does it, my brother does it. But for most of the people, they don't understand fundamentals of the stock market. And trust me, I had almost no clue till 2008 when I really lost my money and I got my gears back after that. How it started, year of 2000 is when there was a very large tech bubble that happened in US, right? It took over the whole world. The whole markets grew aggressively, both in India, globally, and especially in US. Question is, what is a tech bubble? What is a bubble? Bubble is when investors are pursuing or investing in a stock expecting the companies, the underlying business to do much better than where they are, and they keep buying the stock at higher and higher price, which is not justified. The underlying business is not able to perform, or are not able to generate enough profits to justify the stock price. What happened in 2000 to 2002 was a very classic bubble where all the investors expected these businesses to do amazingly well, which they did not. The moment the first business goes bust, that is, they shut down, they let the people go, it starts a domino effect because the next guy who's expecting the first business to pay them says, I'm not going to receive my money, I'm going to go bust. And it's a domino effect. That's how a bubble actually burst in the stock market. This is exactly what happened between 2000 to 2002. The tech bubble, after it had burst, the Indian stock market became very vibrant after that. The interesting part was India has been very resilient to the global markets. The correction in the Indian stock market was just about 20%, after which the journey of India's shining journey started. And when I say the India's shining journey started, the bull markets started in India. I'll explain you what bull markets are. When when businesses or the economy is doing amazingly well and the sun shining sectors, that is the sectors which are growing the fastest. In India at that point of time, it was the IT sector, it was the real estate sector, it was the energy sector. When these businesses or sectors are doing well, generating profit month on month, quarter on quarter, year on year, people keep investing in these businesses, expecting them to do better the next quarter and the next year. That's what we call a bull run because the markets move up very quickly and very fast. Right? And this was happening at an amazing pace in India across multiple sectors when the housing crash again happened in US. This was 2008. This was when a lot of people lost money, including me. And very interestingly, I realized that in spite of our country doing very well, all the economies are connected. So what is happening in US or Europe is affecting India. Interestingly, I had just two options at that point of time. Do what almost everyone else does, that is curse the market, say there's an inherent evil out there, it's not going to work out for me, walk out of it, right, and give up all the losses that you have incurred, right? But what I also realized at that point of time was that if I have lost money, it's a zero-sum game. There's someone else who has made money out there. There are smart guys or celebrity investors who are making money even in a market which is crashing, even when the markets are not doing well, right? And that's where the inspiration came from, saying either I walk away from what has happened or I recoup back all the money that I lost back from the market. But to do that, I had to figure out some things which I never knew. How do a mutual fund manager invest his money? Right? How does a venture capitalist invest his money? How does a hedge fund invest their money? What is fundamental analysis? What is technical? There is so much to learn to figure out how most of the investors make their investment decisions. And guys, interestingly, you'll not realize this, it's less than 1% of the population which is managing the mutual funds and the hedge funds who are taking decisions of how to invest the money of rest of the 99% of the population. The power they had intrigued me. And I did what was very unique for me at that point of time after doing my own business for about 8 to 10 years. I went and joined CFA course. It's an amazingly beautiful course, but I was a terrible student. And the reason I say that is I did not join CFA because I wanted a degree and go and join, say, a bank, a mutual fund, or any of the asset management companies. I joined CFA because I wanted to figure out how the smartest guys across the globe make their investment decisions. And I used to question every damn concept that I felt is perhaps not right. But here's what I learned, and this was very interesting. Every business goes through ups and downs, cycles, and the market goes through something that we call volatility. Volatility is a friend of an investor. It is not an adversary. That is, every time there's a dip in the stock price, it gives every investor or aspiring investor an opportunity to enter that particular stock or the sector, right? It still seems confusing. Think of it like this. If if the sun was shining continuously 24 hours a day and there was no night, do you think that would work for you guys? If your life was a clockwork, everything was as predictable as you could think of it, right? If the stock market moved up at a 60-degree angle, one single line, you just knew what's going to happen every day. It's almost like fixed deposit returns. Or put it like this, if your life was pretty much like a calendar, you graduate at 23, 24, you get married at 26, you have kids at 28, you buy your house at 30, and so on, right? That's not the kind of life most of us want, right? We want more adventure, we want more fun. The unexpected builds the excitement in everyone's life, and that's exactly what volatility does in the market. What it also does is it creates sometimes the bubbles out there in the market. And when these bubbles burst, that's when people lose money. And this concept is very intriguing. Bubbles are actually good. Now, I'm sure you guys would be thinking, kya bol raha hai ye? Think of it like this, and I'll walk you through some of the critical bubbles that have happened in the world. The first one, and probably not everyone realizes, was the gold rush. That is, when people were mining gold, they would get robbed when they bring the gold from gold mines to their homes, and that's when the banking system got created. That is, you deposit your gold and then you withdraw the gold from another branch in another town or city. That's how the banking revolution actually started. 1888, the infrastructure bubble, where in 5 to 8 years, the whole of US and Europe actually got its complete railroads. Infrastructure which would have actually taken at least 20 years to build, got built in this very small span of time. The tech bubble, 20, or I would say 2000 to 2002, that's when the web took over the world. A lot of businesses which got created in a very small span of 3 to 4 years otherwise would have taken at least 15, 20 years to build out and go global, right? Same happened recently with the housing bubble. And interestingly, what happens at the end of some of these bubbles, understand how economies work. The economies are growing at a very fast pace, which includes our own country. Sectors are growing very fast, but what happens at a point of time is they can't keep growing at exactly the same pace. And I'll give you a very classic example. Think of everyone out here who buys a refrigerator, and it will take you probably 5 years again to buy another refrigerator. So till the time all of you guys are buying the refrigerator, the stock price of the refrigerator company goes up. There's nothing wrong with the business, but the consumption or the demand will go down after a point because no one wants to buy a refrigerator in next 2 to 3 years. That's exactly what happens with all the large economies when they are growing very fast. They need to come to a staggering halt at some point, which is what we call a recession. Right? And recession is a necessary evil. Right? When global markets, when global economies are struggling, that is when the inflation is high, when they are not able to meet the supply and demand, recession helps reset the economy. All of us, think of a human body. You're running very fast, you finish 5 laps, but then you need to rest. That's what a recession does. It's not bad. It just pauses the economy, the sector, the business for some time. It's a necessary way to reset business, sector, and economy, which is required out there. What helps in a recession is government is able to decide how to reignite the growth of the economy, which sectors should they start investing in again, right? And that's exactly how markets re-switch, businesses switch again from a recession to a growth economy. And that's exactly the point of time when almost all of us should be investing. If you look historically, a recession which lasted for 8 months in 2008, and this is the latest one. After that, the growth was for 10 years. Every recession where the degrowth is 15 to 20% gives you a growth economy after that, which lasts for multiple years and is at least 10 times the degrowth that you see in a recession. That's exactly the point of time when everyone should be looking at investing. Now, when I say this, I'm sure everyone's mind would be racing saying, recession aa raha hai, it's a good time. Let's talk to the smartest friend out there and he'll tell you which sector, which stock to buy, right? And this is exactly the friend who will say, देखो मैंने बताया था ना, this stock will go up, this sector will go up. And that's exactly the mistake I was doing when I was investing. That's exactly the mistake most of the people do. And that's what I don't want you guys to actually do, right? When you are investing, you have to figure out what you are passionate, excited about, right? Think of a top-down approach. That is, you invest in a economy which is growing. In that economy, what sector is going to grow? Where is the government going to invest? Where is the consumption going to grow? Once you think of this, come back to the businesses which are going to do well in that sector. When you know the businesses that are going to do well in that sector, think of the sector leader, their past performance, and their performance as compared to their peers. That's exactly how you can figure out which stock you should be investing in. Then you go back and validate your idea with your friend saying, I'm thinking this stock will work well, does it make sense? If you're still not confident, do paper trading. That is, buy and sell virtual stocks. What is also very important is put stop losses, put book profits when you're investing. That is, if for any reason your idea, your strategy is not working, you don't really lose money than what you can actually afford to lose. What is further most important, and understand this, markets are going to be volatile, bubbles are going to come, and recession is your friend. So when you're investing, if something has not gone right, don't leave the markets in despair, right? Every day is a new day. Every trade is a new trade. Every stock is a new stock for you. Go back with more energy. Go back with revived strategy. And know this from the Bollywood movies that we watch. If you have not won, if you have not been able to make it right, it's not over yet for you. Picture abhi baki hai mere dost.